Here it is. Good afternoon, everyone. Thank you. I want to thank the organizers for putting this panel together. And to introduce myself, so my name is Renaud Le Goix. I'm a professor of geography at the University of Paris, UMS RIATE. I'm the new head of the UMS RIATE, so if you formerly knew Claude Gralland or Christine Zanin, they say hi. And they were very highly committed with ESPON. I'm happy to be now in charge. So my research has been focused on housing, inequalities and segregation. I'm going to present this project we conducted, the Big Data for Territorial Analysis and Housing Dynamics project. We kicked off in September. We delivered the final report last week. So I'm going just to give you a few insights about the project, and I just want to thank the partners, the CSIC in Spain, the Haute École of Management Arc in Switzerland, Łódź University in Poland, Cambridge University in the UK, the Norwegian University of Life Sciences in Norway, and Avignon University in France. Without much further ado, I'll start with some policy contextualization. And I will elaborate on some of the questions highlighted in this session on functional areas while covering significant results of the study. The point I wish to make in this presentation is twofold. Our goal in the project was to document the many aspects of an affordability crisis in some functional areas in Europe. So we selected some case studies to do that. And our goal was also to document in a way that allows comparisons within functional areas and between functional areas. If we consider as a policy priority in functional areas a balanced development and the reduction of economic disparities, then the conditions of adequate, decent and affordable housing are preeminent, as highlighted in the Pact of Amsterdam and the action plan of the European Union Urban Agenda. One problem being that since the 90s, housing prices have on average increased faster than the income of residents, both for renters and for buyers, in many major cities. In the project, one thing we had to tackle with was the data collected for European cities, not to mention functional areas. The data were scarce. A first insight is provided by the Urban Audit Perception Survey. This map, for instance, was the first approach to the question, how easy is it to find good housing in Europe? Well, we all know it's hard. With a survey of cities, it shows how good housing is considered harder to find. For instance, in Paris, Geneva, London, Stockholm, Hamburg, München, and other European Union capital cities. Harder to find, being related to the cost of housing, but results were limited and imprecise. So another policy-related questions for functional areas is how to collect the set of data to support spatial analysis in order to promote a balanced territorial development. Our main hypothesis was to consider that functional areas and policymakers involved in housing policies have to deal with an affordability gap. We define affordability in the project as a ratio between price and income, a well-recognized standardized indicator to elaborate policies on unequal housing markets. It combines information related to housing prices, ownership or rental price, and information related to wealth or socio-economic situation of the population, income, for instance. For owners, that means that increased affordability gap leads to a socially selective access to a housing market, yielding more spatial exclusion and increased social tensions. The cost of ownership, on the other side, impacts rent and rental apartments. It also impacts the availability of housing to let. The global financial and economic crisis also led to decreasing construction activities across Europe, in particular with respect to social housing, as many governments restrained the level of public spending. Furthermore, for homeowners, real estate has become a major component of housing wealth and assets. So this is to be understood as a major shift on how welfare states are organized and have been reformed. That was discussed a little bit this morning, actually. Many states promote home ownership by the means of subsidies and fiscal incentives to first-time property owners. So, with some exceptions, in a vast majority of functional areas, the percentage of owned dwellings is above the threshold of 50%, with a clear cut that we see on this map between Southern Europe and the north of Europe, where data show a higher proportions of renters. In terms of policies, this has to be framed and understood in one specific context: how advanced economies have shifted towards an asset-based welfare model in a regime linking an ideology of ownership, credit affordability, low rates of interest, money is cheap, and since the global financial crisis especially, and house prices, a housing economy often subsidized by the state and local government. To do so, we chose 10 case study series to be 10 functional areas covering 4 countries, and among them 1 cross-border region: Geneva, Annemasse Annecy, all together for the cross-border region, Avignon and Paris in France, Madrid, Barcelona, and Palma de Mallorca in Spain, and Warsaw, Łódź, and Krakow in Poland. Well, I will not cover the methodology of the study in details in these presentations. There will be other occasions during the 2 days during this event. But to better comprehend the results, our choice has been guided by 3 principles. To make data available in case study at the best geographical level possible, we used local administrative units 2, LAU2. All the maps for the presentation are based on LAU2. We also used the grid, the 1 kilometer grid that has already been discussed this afternoon. We proposed a methodology that used an harmonized set of data coming from institutions such as transactions and data harvested on the internet. We call them in the report unconventional data to inform housing market. And we compare the data sets coming from actual transactions and data harvested on the internet on real estate website and advertisement mainly. And we bridged the data sets, which are very heterogeneous, so as to produce harmonized indicators that allow to compare between cities and within cities. So the next part of the presentation, I'll focus on a few case studies. I will not have time to cover everything. And I'll start with some examples from Poland to highlight some of the results. In Poland first, the selected functional areas reflect divergent paths of demographic and economic development in the last 3 decades, with dynamic regions such as Krakow and Warsaw functional areas, and on the other hand, Łódź functional area that became one of the fastest shrinking city in Poland. On this map, we compared the price of rental harvested on the internet and the median national income. To clarify the idea underlying the reference to national income, the question is to what extent it is possible for a median household living anywhere in Poland to access affordable housing in any given neighborhood in Warsaw, Łódź, or Krakow. The map shows the numbers of days of median income to rent 1 square meter. The level of housing affordability generally reflects the geography of real estate offers, with lower availability in the municipalities, with more expensive offers for sale and rental housing. Intriguingly, it is difficult to distinguish one common pattern, the famous center-periphery pattern. It's very difficult to distinguish it for the 3 case studies. Whereas the city of Krakow has the lowest housing affordability, and the lowest housing affordability characterizes the core city, suburban locations also show high rent-to-income ratio in Łódź and Warsaw. The low housing affordability in some suburban municipalities may be caused by the specific relationship between the relative low incomes of the sitting population and the new waves of suburbanization, bringing new housing further away from the core city. The patterns of housing affordability appear not to conform to any zones or sectors and do not show the classical core periphery structure. So that was for the Poland case study. Moving to another case study, another example in Paris. This shows another way of how we approached affordability. In Paris functional area, the housing market is considered as very strong, very tense, and highly unaffordable for local residents. On the three maps, the spatial structure of affordability shows very contrasted patterns in Paris. Furthermore, what I want to insist on is that we have two different ways of measuring affordability, and it shows very different results. On the one hand, the map to the left, affordability measured with reference to local income of in-place residents shows that buying an apartment downtown Paris will cost at least 3.8 months of full income per square meter. This is not true in the wealthiest part of the functional area, where local income offset the cost of housing. This analysis of unequal affordability is strongly driven by the effect of local income. With lower income in the northeast of the functional area, the structure of housing is more and more inaccessible to local residents. On the other hand, the middle map. When compared to national income, the question to what extent average households living anywhere in France could afford to come to Paris, the picture is very different. The entire western corridor is very unaffordable, more than 2 months of income by square meter, while the northeast and southeast sections of the functional area corresponds to areas where apartments could cost between 0.8 to 0.2 months per square meter. I'm moving to the third map, to the right. That shows the differential accessibility. In other words, what is the difference between what a local resident could afford and what an outsider willing to come to Paris could afford? While most of the western side is unaffordable in purple and out of reach for many people, part of the region in yellow remains more or less affordable to an average household, while it's not affordable anymore to local residents. So the price to income spatial structure highlights how property markets pressurizes the potential for ownership and decent access to housing in the inner ring of the region, in former blue-collar districts, and in now gentrifying neighborhoods especially. Last example, Geneva. The housing market in the cross-border region of Geneva and Sea is also structured as very segmented and heterogeneous. This is the example of the rental market. Switzerland is a country of tenants, while the ownership rate is significantly higher in France, around 60% in Savoie. The central structure of Geneva, one more time, does not clearly structure the spatial distribution of rent. The average rent in the city center of Geneva is below rental prices in the surrounding local administrative units. Higher income communes located on the south coast of the Léman Lake show in contrast higher prices. These are the locations the least affordable. Rentals are also more expensive in the French suburban peripheral areas located on the Jura foothills and also on the southern border in the very well-connected, highly accessible area between France and Switzerland. Well, the results are counterintuitive, as the tense situation of the rental market in Geneva City has often been commented. However, a main explanation for the relatively low rental price in Switzerland is due to institutional protection regarding tenants and rent price regulation. This leads to another conception of inequalities and housing. Where are rental markets the more profitable for landlords? One common approach is to calculate how much one landlord should invest for €1 of yield, for €1 of rent. Needless to say that peripheral areas are the most profitable on average. which is an element to keep in mind when we want to address where property values are capitalized upon by owners and landlords. These are the areas in red on the map to your right. This leads to real quick our conclusions. I think this chart is hard to read from the back of the room, but housing costs exacerbate differences, inequalities, and segregation. The affordability gap in our study is shown as detrimental to the wider middle class that have to move to the remaining affordable places in functional area. I'll give a little bit more details on that. For lower income households, Geneva, Warsaw, Krakow, Madrid, Barcelona are by far the least affordable functional areas for ownership. This is mitigated a little bit by the rental structure in Paris and Geneva. For median national income reference, roughly defining the pivotal middle class, the least affordable cities are Geneva, Warsaw, and Krakow, and to some extent Paris, for ownership applicants especially. It does not actually translate that an evidence into an issue of accessibility or affordability problem for the 10% of the wealthiest households, but to some extent, Geneva, Krakow, Warsaw, and Paris are the most exclusive markets for the wealthier part of the population regarding ownership. So to comment this affordability gap and how detrimental it will be for segregation, I have to insist that moving to suburban and peripheral areas of functional areas, the affordability gap also often locally fuels profitability and housing wealth accumulation, especially in suburbs. Markets are now also constrained in the inner ring of the regions, in former blue-collar neighborhoods, and the phenomenon is not anymore circumscribed to the more central locations. Although those very spatial patterns are very diverse, this is not an homogeneous issue, and strong disparities exist between functional areas and between national markets because there are national regulations for housing. A last important process I want to mention is tourism and hyper-touristification, which is also a preeminent process. We had a look at Airbnb data, but I'm not going to comment it now. I don't have time. And among the many important processes that we want to address if we need to regulate property market are how we regulate urban dynamics and growth, how are regulated the local contingencies in the structure of submarkets, the effect of rental housing compared to the effect of ownership, and how the investment is driven by public policies and ordinary financialization of housing. I mean, housing as an investment. Thank you very much.